announcement for Salesforce, CRM, and Amazon AWS. They do deepen their collaboration to launch Agentforce 360 for AWS.
What's up? What's going on, everybody? Hello. Hello. We'll get started in just a moment here. I gotta set up a few things. I'm like on the cusp of being done. Had so many problems trying to go live today. All my monitors were all misplaced. Screens weren't working. The rush to deliver new chords. What is going on? What the heck is going on? Welcome to the city. Doing it live. Welcome to the city. This is where my trade desk is. We're gonna look at some various stocks today. It's been a choppy session.
On energy from Fitch,
lower this
they
music.
have cut its 2025 to 27 all price assumptions reflecting market oversupply.
It's been a choppy trading session. So just bringing you guys to my trade desk. You can ask questions. We'll pull up individual stocks, see what's going on for any day traders out there. And then we're gonna look at some swing trades, see if anything's setting up. Try to create a couple ideas and kind of go from there. So if you have any names you want me to pull up, make sure to drop them in the chat. What's up, Comrade? What's up, Trade and Grow? What's up, Arternian? What's up, Hoover? Barkster? Scott? Ponzi? Welcome in, everybody. Welcome in, everybody. Post out on Twitter or on X. I still haven't figured out how to stream on X. I can't get the code right. It just doesn't work. I don't know what's going on. Very weird. Okie dokie. Artichokes. What's up, Devo? Yep, we can look at HUT. We can look at anything. We can look at whatever. All right, well, not everything. What's this? Is this chat thing working now? Oh, hey. The chat's working, actually. That's a first. Good, I'm glad that this is working now. Because that wasn't working. It was only connected to Twitch, and I have multiple chats, so I'm like wondering what's going on there. Okay. Let's hop into... I want to make sure everyone can hear me. It looks like my mic is on, so that's good. I'm out in the Sacramento area. It's obviously a fake city that I designed there, but we're going to take a look at the SPY for right now. We'll look at market flow. If you all watched yesterday's video, you probably have some idea as to what these levels are. So we started the day with a little bit of a gap down. Most of today's price action was a lot of uncertainty. There was some news that dropped, right? Had a big effect on Microsoft, well, and the market. Microsoft started down at its 2 standard deviation move over here. Down over here, we got our alert. We had Smelly in the Discord. That's one of the users in the Discord, kind of point that out. He made a trade around the 2 standard deviation and scaled some out over there. So good stuff there. I actually traded Microsoft today, but when I was looking at it right here before this big old bar came out saying that the news was fake or whatever, I was looking at it and I was like, hey, this is actually a pretty good area to just buy into. And like a minute went by and then this thing went off. I'm like, okay, well, I can't buy it now. So I was just kind of watching this go sideways here for a minute, and then I bought a little bit here, I sold a little bit, and then I bought a little bit more when it tried to come back down to daily VWAP. And actually for right now, I got to actually check because I feel like I scaled it out, but now I can't remember. So give me a second. I just got to double check here because this was meant to just be a shorter term trade. Let's see. I scaled out. Okay. Yeah, it was a small trade. It was nothing crazy. A couple thousand shares. It was tiny. I'm just kidding. Couple thousand shares. Tiny. It's like a $480 product. Nah, I make like $200. But hey, $200 is $200. I'll take it. I'll take it. Okay, so yeah, the S&P, I get off track. So that's what caused kind of this whole initial reaction out of the gate. We had some news come out, and we really just chopped around. There was no direction on market net flow. There was nothing, right? And then we had some macro data come out, and we hung around that GEX level, this gamma exposure level. Let me see if I can zoom in here. Boom, there we go. Okay, so we hung around the 681, and then market net flow finally started getting a little bit better, right? Not by much, but we started finally getting some convergence over here. The green line was above the red line for the bulk of the day, but really hardly so, right? This is the 0 line, and you have the red line below it, okay? The green line's been kind of below it all day up until recently. So there's a lot of exposure over here. This would be the main target level, would be 685 for the S&P 500. And we're not there yet. And this was, one of the levels in yesterday's brief. We had 685 up into, and that's kind of in confluence with the daily expected move. So for right now, that's kind of what the market's targeting. I wish the market net flow looked a little bit stronger here.
Oh, it's getting a little bit. Can close deal to acquire Spirit Aero
right
before 30-day comment
period. So 685 would be the target, a couple dollars higher. This dark pool print was the largest dark pool print. It was acting as resistance throughout the day. Now Potentially it turns into support. We actually haven't tested it from the upside really quite yet. And we've really just been in a choppy sideways range, and we're kind of at the upper bounds right now of this range. So are we trying to go for the break? I would say yes. That's what price is trying to do right now. Yep. NVIDIA flat on the trading session. We'll take a look at some of these larger market cap names. NVIDIA's flat, not going anywhere. So if these were to catch bids, this would be a huge, huge, huge help for the overall market. Yeah, and then Apple too, right, down slightly on the trading session, relatively flat, right? Relatively flat, but it's been putting in a series of lower highs. So not the greatest look there. But, right, if we go to the daily time frame, I mean, we went straight up. So, yeah, it'd be nice to see some consolidations. Google's a big help today. This one I'd like to see go sideways for longer, but this thing has been kind of a rocket ship to the upside. Just consolidating right now. And then we have Tesla. It's been helping out today as well, up 3%. Retail's been showing out. XRT, retail names starting to break out. Makes me think about Real, R-E-A-L. This was one that we talked about in a video where I went over a bunch of different setups, and this one was down here. And that's a big move from when we last talked about it. The target was up and around the 1750 range, and I mean, it came dang near close. I mean, that was a 50% move, right, in a month's time. So that's crazy. The Real. The only reason I know about this place is because my wife likes to go there when we're in New York City. It's like a, I don't know, what kind of store is it? It's like a, is it called consignment store, right? Where there's like, they have like higher end stuff, but it's like used or whatever. It's pretty cool. I wear Abercrombie plain t-shirts and Fabletics. I don't really wear luxury things. I feel like I would look really weird with like a Gucci shirt on. What are you wearing? You look like a dork. It's an online reseller. Yeah, but they have stores, Devo. They have retail locations. The Real is 100% has retail locations too, but they do it online too. Yeah. Yep. New York City has them. We've been in them multiple times. Multiple times. Your Costco model. Colby, that's hilarious. I feel like I know exactly what you look like as soon as you said that. That's like my brother. My brother is always like, he's always got the latest Costco drip on. It's one of those days. It's one of those days I just don't feel rushed to trade at all. I traded a little bit today. It was pretty much day done at like $50 in profits because it was so choppy. And then we had that Microsoft news, and I did kind of trade into that a little bit just via NQ. So I made like $100 across some accounts. Nothing crazy. And then, yeah, a little bit of Microsoft. Okay, so we're just kind of floating up higher. That's basically all we're doing right now. Market net flow is bullish, so I would still suggest that, yeah, 684, 685 would be kind of that, well, 684 is where we're at. But the 685 up at the daily implied move, that would be the initial target. We have a lot of time in the day, so maybe even a pullback would be kind of nice.
Demand 2.5 billion down.
Maybe to test this dark pool level at 683.
Billion,
and then go.
40 counterparties up from 11.
Let's do a VWAP here. Yeah, well, I mean, we'll see if we can get that. I don't know. That'd be, we'll see. Get a little bit of a volatility kind of shock would be nice to create some sort of a fake out to maybe potentially move higher. Hey, but what am I supposed to wear now, Jims, in Sacramento? I mean, I'm a Giants fan, but the reason I have this is because it was the only hat around. But mainly, I went to the Yankees game, and that was a great time last time I was there. That was, I think it was a playoff game a couple years ago. I can't remember exactly, but it was I'd have to look at the photos. But yeah, I'm a Giants fan, but now the A's are playing in our city because of, I guess, their stadium or something. And they're like right down the road. Yeah, okay, so let's look at the SPX gamma exposure levels. The main level here, the focal point, I shall say, is at 6850. And where are we? We're at 6850. We're slightly above it. A little earlier today, we came into it. We kind of came off of it a little bit, and now we're recouping back into that level. Yesterday, we tagged it, moved away from it too. So we're kind of just floating in and around that level. Yes, I've been watching CNC, Mabino.
Update for Citadel is launching a new AI-powered tool.
It wasn't CNC
aimed
that I was
at
watching.
equities investors, according to the CTO.
Which one was I watching? I thought it was CNC. I can't remember. Well, yeah, CNC looks pretty good. You know, this huge gap down is kind of interesting, though. But we are making a series of higher lows. That's good. And now we're kind of coiling up right here. So it's, you know, you have a good eye to catch it. And we're right at that year-to-date VWAP. So, you know, a break of this could, you know, change kind of the feeling that we have around, you know, everyone being down from a year-to-date basis based off of that time and volume. So the psychology of this equity could get, you know, healthier, maybe go test that declining 200-day. And it's just, you know where you'd be wrong, at least for the short term, right? If it breaks down from here or from this level. So your risk to reward actually does make sense here to create some sort of a trade idea. Right? And it's in you said it's in the healthcare sector. Yeah, healthcare sector, which has been doing good. Yeah, MMM. I have a position in MMM. So I have a position. I think I originally traded it here. And then I can't remember exactly what I did. Today it went for a nice breakout out of this consolidation, but it kind of is kind of squatting in on itself right here, just sitting back down around, like kind of more towards the lows of the day. I hate when that happens. I do, but you know, it's just the environment. The environment's been kind of wonky and wacky. You've been getting a lot more fake outs and shakeouts. But still, I mean, this is a new high, right? This is a new high on the year. And that's not bearish. You know, could it be bearish in hindsight? This is the top? Yeah, maybe. But overall, right, if you know, highs typically lead to more highs, right? Highs typically lead to more highs. Higher highs, higher lows, lower highs.
Update from the FT. So bond investors warned
I got a position in MMM.
Picking Kevin Hassett as Fed chair. This does align with some reporting we've had earlier from the likes of Fox. So that's FT reporting. Bond investors warned US Treasury over picking Kevin Hassett as Fed chair.
Oh, I did take profits. Okay. So, I mean, I've kind of been dancing around a position. So I think my average position is going to be kind of, it's not going to, my average position, it's not going to be my entry exactly, but I'll tell you, it's 168.87. So yeah, basically like right here. And the size that I have going on for MMM right now.
And so, just in terms of some of the arguments of those participants,
I have a 2% position in it. So
they said they were worried about Hassett's alignment with Trump, who has insisted rates should be cut sharply. They do also add that they are worried Hassett could agitate for indiscriminate cuts, even if inflation continues to run above the Fed's 2% target.
So yeah, I have a 2% position in MMM. My stop is probably going to be, I don't think I've updated it. I have to check now. My stop will probably be just under this low. And personally, I would like to build into the position. So the fact that this isn't taking off on me right now, I'm like, okay, well, maybe I'll get another opportunity to kind of build into it. But overall, looks pretty decent. I'll look at APA, Netflix, oil looking good. Yeah, we can look at CAW and region. Go Giants. Yeah. My first ball game I went to, my older cousin took me when I was like 3 or 4 or something like that. Or I just remember going with him. It was at Candlestick Park. Candlestick Park.
Although do keep in mind with that FT report, does note those discussions between the Treasury Department and players on Wall Street that did take place in November before Bessent held his final round of interviews with candidates on that Fed chair role.
By Coralmont High School. Cool place. It's weird going back there. It felt so big. And then you go back when you're like older and you're like, whoa. It's like all hills. Streets are all like tiny. It's not how I remembered it being a kid. Here's another trade that I'm in, ACN. This was in the trade ideas in the Discord. I traded at my average is 248.50, 248.51. So like right here. Why did I trade this in a bad trend? Well, price action, right? Putting in higher lows. Price action was coiling up. It was starting to break above it. So I thought that it makes sense from a risk to reward standpoint. I scaled some out already. So I still have a little position. Actually, it's a starter position now at 1.5%. So it's, once again, if I look at my total portfolio right now, I've kind of I take my foot off the gas a bit because we're coming into year end, and I'm happy with my year-to-date performance, and I'm prepping for next year. I'm like, 20% invested. Maybe 20%. It might have actually changed just a little bit here, which means I'm 80% cash. And that's fine because some of the names that I have, right, are higher beta. So even a 2% position, technically, if it's a 3 beta, it's moving 3 times, what the S&P 500 could. So at 20% invested, my portfolios probably still can keep up with the S&P 500, same as if they go up, and so forth. Like today, my portfolio, well, I trimmed some, so I don't know if it's actually giving me the accurate reading right now. But yeah, so the S&P 500 is up 31 basis points. Right now, it says my portfolio is up 23 basis points, but I did remove some, which changes that. So I was probably up 30 to 40 basis points today, which is new all-time highs for my portfolio. As the S&P 500 is pretty much right around new all-time highs. Do I love it when people say cash is trash? I mean, hey, if you want to throw your cash in the trash, I'll be there to pick it out. I'll be there to take it. You just tell me when you're throwing it in the trash. You know what I'm saying? I haven't covered many stocks yet. I was just a slow mover today. We can look at MicroStrategy. Honestly, I read this right, and I traded it. but I don't have a position anymore. And I think that that was a bad idea. I think I should have left some runners on. So I traded it in and around the 2 standard deviation move from December 1st. That was a 2 standard deviation daily move. So we had all this news, and I swear to you, I saw so many headlines, and then a lot of prominent macro people and YouTube people, right, were like, just like, not necessarily extremely bearish on it, but there was a lot of, bullish, bearish on it, whatever, that doesn't matter. But there was a lot of noise. And when I see a lot of noise, a lot of panic, a lot of volume, right? Typically when you have more volume, you get more noise, by the way, right? Interesting how that works. There's more volume, more noise. And there's actually, my party starter scan, what I look for is a lot of volume, but little noise, because that might mean there's a big player behind the curtains trying to keep things quiet. That's always, we can run that scan, see what comes up. But we were down here, bright red, a lot of noise, over a 2 standard deviation daily move. It just makes sense, especially after already a strong move to the downside. It just like, hey, if I'm going to take a shot, now can be the shot, right? Now, typically you get, once, you're in a bearish trend, right? This is not a bullish trend, people. So you got to always think through this, right? It's a very high beta name. Lower highs typically resolves itself lower. So are we just getting a reflexive bounce? Maybe up to and around 200, maybe even 220. Then people get excited, but this would what the chart would look like in a bounce like that. It would still look broken. We saw a bounce like that here and right here. So it doesn't mean anything necessarily from a structural standpoint, but it does create opportunities. You wrote a MicroStrategy down 35% on the downside. Nice. And you know what's crazy? So yeah, so if you catch this move 35% to the downside, you want to know something interesting?
Ferrari,
I didn't trade MicroStrategy to the downside. I hardly short, but when I traded MSTU from down here to right up here, do you want to know what the profit was from a one-day move?
Corporate and working capital purposes, and does replace the one due December of next year, which has been cancelled.
25%. So there's opportunities from downside and short side. So you ride that all the way down, and then I step in over here, and I make 25% in a single day, and I don't need to have to wait through, anything. Now the sizing, my sizing, just so you know, is small when I do this kind of stuff, and when I'm shorting, it's actually even smaller. So, but good catch for a MicroStrategy down to the downside. A lot of people were shorting this bad boy, which means, and the reason why a lot of people short this is because it's very difficult to short Bitcoin itself. It's not like it's easy to do. So people will turn to things that are highly correlated assets, which could be something like Coin, could be something like MicroStrategy.
By year's end.
This would be a lot easier way to short Bitcoin is by doing it through MicroStrategy. But to short Bitcoin itself is not the easiest. Yeah, that is a very clean short. It doesn't get much more cleaner than this. If you took a short trade down 35%, that doesn't get much cleaner than that. I wouldn't be able to hold it that long. I just don't like shorting. Unless if it's quick fade. Yeah. We're about $1 away from that gamma exposure target. Market net flow, it's still bullish. A lot of the attention still at that 684 strike, which makes sense. We're right there right now. And then we have our convergence kind of waning. Coming off a little bit. 2 standard deviation move for Bido. Worked nice. Very cool. Yeah, the Astrobot is it's pretty rad. I asked the community for some updates of what it might look. Yesterday I asked, if you have any ideas for changes or updates to the Astrobot or the Asher section, let me know. And I got some decent ones in there. Actually, they were all good, but some of them required me to build the program outside of Discord, and that unfortunately would cost a lot of time and a lot of money to do. And I couldn't do that for, it would have to be it had to be a separate service. Because it had to be outside of Discord, like certain notification type of stuff, which you can technically set up notifications in a way with Discord. Maybe there's a third party thing, but there was other things that were mentioned that I was like, yeah, I can't do that within. So I'm trying to think through ways that I can make it still work, but within Discord. That's going to take me a little bit of time. And just, these alerts, they're not like, when you get alerted, it's not like, hey, trade now. Like, so for example, just now at 10:26, so a few minutes ago, McDonald's hit a 2 standard deviation move. I traded McDonald's, so I have a position in McDonald's. And I've already scaled out, which I'm kind of bummed about because it's moved 2 standard deviations today. Go figure. But the reason why I traded McDonald's is because not only did we have a 2 standard deviation daily move here, the other day we had another one. So that's like back to back. I'm watching like McDonald's just showing up on the radar, and I pull up the chart. I'm like, why? What's going on here? So when you have substantial breaks like that and you look back at the chart and you're like, that's a pretty aggressive move to the downside, you can play for bounces. SYM yesterday, let's see where that's at now. Look at this one, boom. So unfortunately I got out earlier this morning and now it's up 7% on the day, but yesterday, you can see the green line, that was my entry. So the green line down here was my entry, but yesterday, Symbiotic hit a 3 standard deviation move. It closed outside of 3 standard deviations. A huge move. Huge. Right? So I was trading in and around it, trying to do something into the 2 standard. It wasn't working. And then all of a sudden we're like way down here. I'm like, yeah, I'm going to go ahead and hold on to a little bit, because after a move like this, it's very common to see a pop higher. Or, or if it goes down to another 1 standard deviation, 2 standard deviation move, I can then look to adjust and scale. But I got out a little bit earlier today, which now I'm kind of shooting myself down for. Or maybe it was over here. I can't remember exactly when. But there you go. That's a pretty large leap back today. I don't have a position anymore in this, but what caused this 3 standard deviation move? So it was actually news driven. It was Goldman Sachs. They did a downgrade. So sometimes when you get like news events, you can get those big breaks. But even that, a 3 standard deviation move. Think about it, right? So I'm not just saying that that's crazy. It is crazy. 3 standard deviation move, right? You're within a 3 standard deviation move 99, a little bit more % of the time, right? 2 standard deviation move, right? 95. I'm just rough numbers here. And then, 1 sigma move is 68 or whatever. So to close outside of that, it's pretty wild. And this is insane because the markets are pricing in these levels. So when the market gets it that wrong, or gets it wrong multiple times in a row, there's opportunity within there. So yeah, McDonald's is at a 2 standard deviation move right now. Let's actually pull it up. This thing is cranking. And no, that does not mean I short it. Once again, I'm not much of a fan of shorting. Now, if it was like a much more speculative type name and it was already moving straight up, maybe I'd look to fade, but it's not high priority. 306.70. So right here. So we can come back to this a little bit later and just say, hey, how did McDonald's fare? Now, based off of probabilities, not based off of anything, clever about me. Probability suggests that McDonald's will come back into this 2 standard deviation move. That's what probabilities would suggest, right? 95%. We close within this. So only 5% of the time do we close outside of a 2 standard deviation move. But McDonald's, the market's been getting it wrong. It's been getting it wrong these last 3 days. So, yeah, it's not something that I would trade. Roku just got an alert. Roku. So let's see how this works. Roku just hit a 2 standard deviation move to the downside. 92.56. Okay. I've traded this stock many times. Right? So now when I see these alerts come through, right? It literally, I'm looking at it on my other screen here and I'm watching when I get these daily alerts. All right, so we just hit a 2 standard deviation move here. And then I like to look, I'm like, okay, is there anything structural happening here? And I would say, yeah, like, right, it's from a technical perspective, right? We're lower highs, lower lows, and it's kind of following this steeper trend to the downside. So it's a steady, steep trend. This was the same thing with Symbiotic yesterday, and it actually kept breaking down. Now, the probability suggests that we can trade back up into the 2 standard deviation move. So personally, I mean, I would like to see it come off more, or if I start small, right, I would be hoping that it actually goes against me some more to create a little bit better of an opportunity to trade upwards. Now, you go into the 15-minute time frame, like, yeah, the RSI is oversold. It's underneath this value area over here. The daily time frame, the chart doesn't look great, and it just kind of had this structural break of this, could be considered a bear flag, as it kind of retested that 50-day and declining 200-day. So not the greatest look from a daily perspective. So this one probably wouldn't turn into a swing trade, right? But it does create some potential short-term opportunities if all of a sudden, like saying, okay, we're nearing that point where Roku is done for the day on the sell side. And if we get a little bit of a bounce back, right? Like say, okay, yeah, say if it's going to just kind of reflexively bounce back in a range, just to move back up right here is, about 1%, right to 93.50. Right? Yeah, there's probably some sort of news around it, right? There's typically news, right? When you get 2 standard deviation moves, like there's typically news. Not all the time. And if there's no news and the market's strong, that's great because those create some great opportunities there. I mean, I don't see any news on the live ticker, but it could be maybe on a different feed or something like that. All right. So we'll see how Roku plays out. All right, well, let's take a look at the market. Market's, rather bullish. We're not too far from the 685. Feels like it's going there. Let me check chat. NEM looks good. Okay. All right, Matt. I'll take a look at that. You've been on a roll with your charts. They've been looking really good. Hey, Christopher Capital. That's one of the updates that I'm looking to do, to have a separate channel for 2 standard deviation moves, potentially even 3 standard deviation moves. He said, what? And then also having another channel for the larger names that are more recognizable and ETFs. So potentially like a channel that has SpyQ, IWM, and like the Mag 7. So if you see an alert pop up through there, it's like, okay, something's moving. Right? Do I know about the Trump news release at 2 p.m. Eastern Standard Time? Not off the top of my head, no. Is he dropping a bomb? We are in positive gamma right now. It's still fine for tick trading, but you're just going to get less alerts. You're just going to get less alerts typically. Okay. I think I saw earlier some flow come in for plug, by the way. I want to just pull up that name. Well, Roku's making kind of a move here. So there you go. There's a nice little pop. You know, that was 67 basis points, but it was from underneath this, so I don't know. Okay, so I'm gonna pull up plug and we'll come back to Roku. Just because I'm pulling this up doesn't mean execute a trade, by the way. I saw something, I can't remember. I'd have to pull it up. All right, we're just kind of floating in around this year-to-date VWAP. And it is, kind of wedging here. I'm not a fan of trading these low-price stocks. Every once in a while, if I do, it's just like, I don't know. It's just not my cup of tea.
Update from White House official says US and Russia had a thorough, productive meeting.
Yeah, there was some news around Microsoft this morning.
And just more detail. So Witkoff and Kushner both briefed Trump after the meeting with Putin on Tuesday.
Something about lowering AI software sales quotas. But then they came out and they said that's not true. Fake news. And then we saw this pop over here. Oh. Yeah, there's a lot of info in Discord. It's going to be overwhelming, that's for sure, because there's a lot of data and you don't need it all or necessarily need to use it all. You got to there's just a bunch of different stuff in there, a lot of tools, a lot of resources. So, you play around. Like, don't that's why I try to tell everyone, don't rush, right? Stop trying to rush to make decisions. There's no point, especially if you're doing this for the long run. Like, if you want to stay in this game, patience is the most important thing. Right? Don't overdo any sort of position sizing. Everyone knows this stuff. It's just sometimes you forget when you're in front of your screens, I guess, or your mind gets overridden. I actually made a video on kind of how that works in the brain. Probably an important video for a lot of people to watch, but 5 people watched it, so. Here, I'll share the link. I'm seeing some names come in, so we'll pull up some individual names here in a second. Thanks, Christopher. When did I make this video? Full-time trader reveals trade ideas no one's talking about. Just so you know, that video that I put out when I did that, dude, there were some names in there that absolutely exploded to the upside. Once again, this video got like no views. People they care about what's already moved. If I talk about names that haven't actually moved yet, people don't care. I don't get it. I just don't understand why. I mean, I'm assuming some people care, but not enough to actually like people to actually see it. If GameStop goes up 200%, and if I make a video about GameStop after it moved 200%, it's going to get more views than if I talk about GameStop before it moves 200%, right? I talked about AMC at $2, like in, I forget when, but on TikTok, everyone's like, it's going bankrupt, this or that, because it showed up on my party starter scan. I'm like, yeah, I don't know. And then it fires off, and then all of a sudden, everyone cares about AMC. It's awesome. All right, so, oops, what did I just do? Oh, there we go. That was weird. Oh, that was weird. Here you go. Here's a video for kind of more of a psychology thing. Put it on the playlist for later. Didi, so yeah, that sucks, man.
Update
that
for
happens. It's
Spain.
very common.
Are hearing from the economy minister, so Spain will only use
The
about
only way
25% of loans available
to get away from
EU
that,
recovery funds.
if you can't do it
Spain has not
yourself,
seen any significant
need
impact
hard
at
locks.
the macro level from
and
the
you have to
US
do it
tariffs.
manually every day.
Spain,
And I know your
confident
brain
on
right
the
now is
EU
telling you,
Mercosur trade
nah,
deal
I ain't
can be
doing that.
signed by year end.
But if you're used to making small up days, the thing what happens if you say, okay, I don't want my account to go down more than $200 in a day, if we're talking in terms of the prop firm or whatever, you can tap, like most prop firms have the ability, or whatever accounts will allow you to go in there and say, yeah, I'll look at us on, go in there and say, like, my max loss for the day is $200 or $300 or whatever you feel comfortable with. Now, if you do that, right, your brain's going to tell you, I don't want to do that because I go down under 300 to make my money, and I don't want to do that. Well, don't listen to that little guy on your shoulder. Do what I said. And the reason why is because now your brain, if you do that and you lock yourself, and you can't do anything about it once you're locked, what happens is you are then going to be forced to only look for the best trades. You have no other, you're not going to just try to because you know how easy it is to lose a couple $100 or 1,000, whatever your portfolio size is for that. Okay. So that would be the way. And then if you get stopped out, your max loss is always going to be that. So. If you're used to doing stocks and ETFs, what's the best resource to help learn how to add trading futures to the toolkit? So if you're brand new to futures, brand new,
expects more IPOs and leverage.
First, you got to learn about
sponsors.
tick values and the products, right? Probably the best to look at something like MES, right? Or MNQ, that's E-minis, E-micros. They're a little bit smaller in size. I would not start, Christopher. I personally wouldn't say, hey, start an account and put in $2,000, $3,000, $5,000, $10,000, whatever, your thing is, because the ability to lose it and then understanding the margins on it, very easy to do so. Very easy. So if you're just starting out, I do think that going towards a prop firm, even though that you have to follow all their rules and all this stuff, whatever, at least you'll understand how it operates and works with still giving you the ability to potentially make money. And if you blow the account up, the only thing that you lose
in around 9 minutes time, we are looking out
is
for
the money that you bought for that
treasury buyback, cash management
thing, right? So, for example, for me, I went into Tradeify and I bought 5 accounts. Now I was already kind of familiar with futures and all that good stuff, but I bought 5 accounts because that's the max you can buy. I did direct to funding. I don't even know if they have it anymore. I haven't been on Tradeify for a while. And I went super slow. I have the video about it, by the way. If you haven't watched the video, I made a video of what I did. I went super slow. And I mean, I took it up to like 80 grand. So I was just constantly getting payouts. I paid for my entire backyard doing that. And it was a sim account. It wasn't even a real account. So then they cut me off, obviously, because that's how they hedge themselves. They can't let a profitable trader come in there and take more than, that, or spend $2,500 and then they pay you out 80K or whatever,
Just making you where we are.
Well, less than
Guessing
that because they
comments
take
on
up.
the Anthropic
There's a
CEO.
percentage difference there, but
CEO says the company will land somewhere
kinda,
between
that's how
8
I would
and
kind of
10 billion in revenue
start
this
out.
year.
And then if you make that money, like say if you make a payout of whatever, you can take that money and then go turn it into a live account. That'd be one great way to do it. There's another company out there called like the Prop Desk or something like that. I forget the name. I'd have to look into it, but they're like all about bringing you to live right away. So if you actually do that account with them and you go through their tests and it's kind of rigorous, but they, it's if you do that, they just move you to live right away. And then then you have a $3,000 live account, or bigger, whatever you like, I don't know, however you choose. Yeah, energy doing pretty dang strong today. It's at the highs of the trading session. Yeah, I mean, this thing looks like it's trying to get ready to actually take off. You got these higher lows building right into this little pivot, kind of this cupping sort of pattern. But overall, I mean, is the trend bullish? No, it's neutral, but it is back above the 2050. That's not great, actually. Not a good look for, the S&P 500 if energy starts to outperform. Financials doing good. So this means typically IWM is doing good. You have energy and you have financials doing good. And here you got IWM trying to press this high. Okay. Wells Fargo, just hit a 2 standard deviation move just now for the day. Up at 88.96. So it just tagged into a 2 standard deviation move now. The one that moves you to live quickly is, I think they called it the Prop Desk or something like that. Let me see. I can't remember. The Prop Desk? I can't remember the Prop Desk. The Futures Desk, I think. The Futures Desk. I don't know. I heard good things about it. I don't have the personal experience of it, but I heard decent things. And yeah, I don't know. Wells Fargo is the worst. Everyone hates them. I mean, I guess their investors don't hate them. We just hit new highs. Is that new all-time highs? Probably. I don't know. I'd have to go back further, but it could have just been new all-time highs. We just made history in Wells Fargo. All right, so I wanted to watch Roku to see how this kind of plays out around the 2 standard deviation move. So we saw an initial pop, but now it's kind of under it. These little pops right here, it's like, that it's going to drop right after it, especially after all this sell side. Then you get like this little, little covering. So still could be a good option. I would like to see this more, just panic a little bit out and then, create some sort of a trade back into the 2 standard deviation area. Oh yeah, Asan. Somebody wants Asan, ASAN. I mean, it just had earnings, so I don't love the chart. right? So maybe with earnings, we can set something up here where, it starts to trade up in and around these areas and then potentially break through. Cool. But right now, you're below a declining 200-day. You're below the year-to-date VWAP. It has a lot of work to do. So running and chasing into these levels, it just doesn't make sense, even if it were to go higher. I would prefer to see it consolidate, see the 200 days start to flatten out more and turn back up. And then maybe it opens a door for these higher levels. But the risk to reward doesn't make sense after already a strong move. You know what I'm saying? Like if I buy right here, you always got to ask, where did the market come from? It came from down here and it's been straight up. So, up 20%, why would I enter right here? It just doesn't make sense from risk to reward for me. Doesn't mean it can't go up higher, but it just doesn't make sense because where's my stop going to go? Way down here. So then what? Am I going to like a 1-for-1 maybe? So it just needs more time for something for me.
Update from FMC. CEO says tariffs are going to be a headwind in 2026.
VALE, yeah, this is a big breakout. See, I like these consolidations right here. Boom. Nice. This pulled back into, rising 20, rising 50, rising 200, and it pulled right back into the rising 20. I don't treat these as action levels, but, you look at the consolidations and you're like, okay, now then when all of a sudden you see this, hey, this is my risk, then the potential reward is what? Another breakout? Hindsight right there, but, we can look at names that aren't in hindsight, which I would prefer. Netflix. Netflix doesn't look all too healthy down here. Yeah. You have the 200-day that's starting to kind of flatten out and roll over. Or you already had the 50-day declining, 20-day declining. So these observational moving averages, that's which all they are, they're declining, and the larger one's starting to flatten out. We're below year-to-date VWAP. We kind of just broke down from the bear flag. So, we probably see it chop around for these things to start turn around, catch up. Maybe a couple more pops up higher. But right now, it's looking a little choppy over here. So now we just need more time. It would look a lot different if we started recouping, 115. It would look a lot different in this scenario. Right? IREN. I mean, these things, you'll see moves from these, that's for sure. You've already seen massive, runs from these names. So now you're kind of going through this, larger period of distribution where you get much bigger swings comparatively to, the other tight price action that you saw on the way up. So you got to be very good with how you kind of approach these things because, I guess, okay, what am I looking at? Okay, yeah, price action's contracting. Is this that clean? No, not really. Really not. So come back creates a little bit better opportunities. But if I enter now, it's like, okay, where's my stop at? Basically at today's low, the probability of me getting stopped out here is very high. So I need more sideways price action, right? Maybe if it starts breaking back above these kind of like this zone here, which we kind of kept on getting knocked down, but NBIS, same thing. It's just prove to me that you're worthy. The shorter time frame, right? We're above a 5-day inclining average. That's all right. It's kind of wedging out here. We were looking at it down here. Right? Look out, I mean, just come and look down here. I love this type of price action, right? These type of base breakouts as it's getting back above a 20-day, rising 50. It makes more sense down here. Even over here, right? These higher lows, bases formed. Obviously, earnings shot that through. That always looks better to me. This is all over the place. Now, this might look different, come a year or something. Like, what if it just does this? Boom. Then I would say, yeah, now it's looking really good here. I mean, in all honesty, would prefer buying it over through here if it looked like this than down here. I don't care that I have to pay more because I'm looking for better risk to reward. The goal that you got to understand, kind of my goal is to make the most amount of money in the shortest amount of time with the least amount of risk. So I got to factor all that in. Oh yeah, NEM. Yeah, thanks again, Matt. I forgot. Yep, NEM looks good. You know, surprisingly enough, because miners do track silver pretty good. Be interesting to watch silver because silver's been breaking out and miners haven't really played through that. But yeah, a lot of these miners, they went on big runs. And there's quite a bit
Just
of them
making
that are
where we
setting
are
up pretty
getting
nicely.
remarks from Nvidia
We'll see if there's
CEO
follow through.
Huang
I
says
hate
just
trading
met with
miners.
US
I'm not a big fan.
President Trump.
Investing in them, okay, that's one thing. Like holding long term or whatever for various times. I've done that plenty of times. But trading them, I just never been a big fan of because they just move different.
And more from the Nvidia CEO says discussed export controls generally in the Trump meeting. Huang supports export controls.
SCHD. Schwab dividend. Yeah, I would look at this more of like a. Yeah, I mean, yeah, you're right. So dividend playing sort of ETF. Overall, it's kind of just going sideways. I don't trade this type of stuff. But this would what I could use this as is, a proxy of looking at like, value versus growth, something like that. And if dividends are starting to play out, you can look into the holdings of it and potentially various setups within that. But I really wouldn't typically trade an ETF like this one. I wouldn't mind having like a position in it, that's longer term, but.
Just making you aware with an update to that Treasury buyback. The operation day is for tomorrow, so we will get those details tomorrow. Announcement was today.
Cisco Systems. Yeah, this thing looks, for whatever reason, very strong. Earnings move up, post-consolidation, kind of breaking out of this tightness. Strong stocks typically get stronger. It's above a rising 20, rising 50, rising 200. It came very far on the weekly time frame, but we've at least had 3-4 weeks now, of closing prices in and around that same area. So, yeah.
And just more from Nvidia CEO says we cannot degrade chips that we sell to China.
This makes sense from a risk to reward standpoint.
And does not know if China would accept H200 chips.
PFE. Yeah, PFE we were looking at over here. It didn't really do anything, so it's kind of off my radar, but, it's still kind of shaping up. It's still consolidating here. It's holding above these key averages. Maybe it's getting ready for a little bit of a pop. It's holding above the averages, which is nice. So now you kind of really do know, like, hey, above 26, it's a go. And then, below over here, 24, it's no bueno for now. I think BIIB did the same thing, except this one actually took off. Yeah, so BIIB we were looking at down here or right here. I can't remember which one. This day probably shook a lot of people out, but it did lead up to higher. Some other names within kind of the space. Jazz was one that we looked at. Cardinal Health was one that we looked at. Down over here, massive move. Now they're coming in a little bit. Oh, surprised. I mean, these things flew. Eli Lilly is finally pulling back into a 20-day moving average after a strong move up. Right? This is actually probably most likely falls within the category of a holy grail strategy. The holy grail is when you have a ADX that's rising above a certain level, I think is like above 30, and you pull back into like a 20 EMA. And then once you do, you look for the break above it, above that high, with a stop then below the low to play to the high here. I actually made a video on that. It's from a book called Street Smarts.
Update from Amazon. They announced Sony Pictures
something.
Core now available on Prime
Rashiki
Video in the US and Canada.
I can't remember the other author. But you get massive volume on the way up. And look at this 5-day consolidation. What's the volume telling you? Nothing, dude. It's just taking a breather. So will we go break this high? Probably. Probably. Maybe it takes more time to get there. Maybe it doesn't. But, when you have those type of strategies, you'd be like, okay, if it breaks this high, I'll play it up to there. But if it breaks down here, then I'll just give it some more time. Nice mechanic, Matt. Yeah, good stuff. RIO, Rio Tinto. Yeah, so, I keep a lot of my drawings on the chart so you can go back and look at them. Look at what we were looking at, or I can't remember when, but over here. It's basing out. Price action, putting in higher lows. It's getting tight. It's above a 20-day, 50-day, 200-day, right in this area. Above the year-to-date VWAP. Bam! And even here, right, is still, kind of consolidating within here. And now we're breaking to new highs for the year. Yeah, strong stuff, dude. And that's, a 15% move in a short period of time. Once again, the goal that I have is to make the most amount of money in the shortest amount of time with the least amount of risk. So the first thing I pay attention to is the only thing that I can control, and that's really the risk. What I'm buying, when I'm buying it, how much, and when I sell it. So here's the risk. Even if you just traded it up into here, it's good. Now your risk to reward is skewed. So now you got to look for what? Consolidations. Right? If you buy it here, it's not nearly as good of an entry as it was here on tightness to give you a better risk to reward, or here. Yeah, we can look at NVIDIA, and then we can look at AA. Yeah, NVIDIA, it's not given much here. So it's a lot of sideways, So yeah, NVIDIA would look a lot better if we started kind of recouping that 20-day and this 50-day. It's in a little bit of a dangerous spot. I know a lot of people will probably look at this and be like, hey, it's just kind of consolidating and flagging. And I would say, yeah, you're right. But also if you look to the left, it's actually kind of just going sideways after, a pop higher. And these kind of blow off moves here can mark tops for months. So for now, if you go NVIDIA, you'd be wrong if this low is broken, and then you'd start be looking for these lower levels down here. But overall, this is just a range. So how do you structure this if you want to go long? Maybe go into the smaller time frames. Here's the 5-day moving average. On the 15-minute time frame, it's the 130, and it's technically above a rising 5-day. So if I'm like, you know what? I think I want to go long NVIDIA. Okay, let's structure it out. What would it look like? Well, first off, I know that my stop would probably be down under this low, which is today. So I'd want this to hold, and then if I want to go long, in theory, I'd want it. Was this yesterday? Yeah, this was today, Wednesday. Yeah. And then this was the high. So in theory, I would kind of want today's high to be broken. But, if I enter now, my stop would be down here, and I would be trying to target up into these areas. What's that? It's about a 1-to-1 risk to reward. If I wait to here, it's a little bit better. It's like a 2-to-1 risk to reward. So you then look at this and be like, okay, well, the probabilities of getting stopped out are pretty high, but we're at least in a bullish trend in the short term and the long term too. But in the medium term, the daily chart, it's kind of sideways. So I'd have to be okay with losing $2 per share. So you would say, okay, look at your portfolio and say, if I want to take a full-size position, am I okay with losing $2 a share at minimum, right? $2 a share. So if you bought 100 shares of NVIDIA, or, you look into options and you buy 2 option contracts, or, whatever, wherever you go, or a spread, however you want to structure the trade itself, you got to be okay with losing, in that case, would be $200. Sometimes you can find spreads and get spreads for pretty cheap, if you're targeting up in these areas. No. I don't trade options. Oops. We're still at that 685. We're not too far off of it. Let's go back to market net flow. Market net flow is still, bullish, and we're holding this 684. That's actually a positive sign. Under 684, not the greatest there. But we're above it right now, and that's positive because we can kind of push away from the green line, push away from this. Okay. There's nothing really above it though. Oh, there's 685. There it is. We're not too far off. So just a little bit. Just tap it in. Just tap it in. Thanks for tap it in. Yeah, we can look at PSTG fell off a cliff. Yeah. Earnings. We'll do that to some stocks. That's a big drop in PSTG, Pure Storage, down 27%. I would imagine that's outside of its expected move. Actually, I can tell you right now. Yes. It doesn't even have weekly options. Makes it a little bit less reliable, but still, the expected move was roughly at about $13. So that is a 2 standard deviation move. Because it's 2 standard deviation move. We're at 25.83 to the downside. So 2 sigma move on earnings. However, strong moves like this to the downside, once again, create opportunities. Now, this is what's called more of a bearish peg earnings, right? Power earnings gap. Boom. You'll hear that sometimes. And if we go down more, you typically get pullbacks. Just like if you have a big bullish earnings move, like right here, boom, bullish earnings move, what happened? You pull back. And then you get follow through. So just like this, you can potentially get pullbacks and then follow through. Not always the case, but that's why I love these bullish earnings moves, because I always keep track of them, because I like to play follow through. They just offer up good risk to reward. So yeah, PSTG, 2 standard deviation move, and we're floating right in and around that level. If we get some follow through to the downside tomorrow, pay attention to down here, 65-ish. 64.50-ish. That's the year-to-date VWAP, and after a strong move down, if you're going to come in and test it, I mean, you tested it over here and saw reflection off here. So, you never know. You might be able to see one again. Shakuse! Hey, what's up, Generator? Harsha, thanks for subbing to the channel. A resubscription by DD. Thank you, buddy. Nice Gilmore impression. Yeah. Thanks, PR. Roku. Oh, yeah, well, let's pull back up Roku. Sorry, somebody had mentioned, pull up, Amazon. That's what it was, Amazon. Yeah, so do I have Amazon still? I do have a position in Roku. So from earlier, I slipped one in there, but it's pretty small. So I do want to check in on that. Because it was just kind of under that 2 standard deviation move. It's probably smart that I look into it. I do not have an Amazon position anymore, so I am out of Amazon. Okay. So the trade idea for Amazon was down here for me. Why? Because one, the market conditions were shifting dramatically. The S&P 500 fell under its gamma flip line. When the market falls under its gamma flip line, or we're more in the neutral tone, I look for names, especially big names, well-traded names, highly liquid names, that have been selling off, that maybe potentially caused the S&P 500 to pull into negative gamma. And then I say, is it falling into any level that's important in particular? And here, you have an end-of-year closing price. This dashed line is last year's closing price. And yes, that's an important level, right? It's an important level. So always mark those on your charts, if you're doing an analysis and you're like, hey, where's it coming to after a big sell-off, or maybe it's moving into it, that could be a level of consolidation or whatever. So we're already a strong sell-off, bam. And then what else? Oh, we're in confluence with a trend line right here. Higher lows, right? So that's initially the first test. So we undercut it a little bit. And what do we have here? We have the year-to-date VWAP, the 200-day. After a strong move down, would this be a good area to short it? No, because you have to ask yourself, where did price come from? It came from here in the matter of 10 days, right? Or 5 days, whatever that is. So yeah, the easy thought here would be, as everyone's panicking because it's selling, this would be a good area to execute. You get a bounce. Does that mean that the stock is fixed fully? No, because all we did was just bounce. So now you either leave some runners on, you get out of it, whatever the case is, update your stops, take partial profits, manage risk, because that's the only thing we can do. Now, if all of a sudden price starts to consolidate and set back up, then we might have another trade setup. Or maybe price comes down, puts in a higher low, then does something like this and sets back up. Maybe price flies up higher and then consolidates, then sets back
Update
up.
for Morgan Stanley pitches investors for SRT tied to data centers. That's Morgan Stanley pitching investors for SRT tied to data centers.
Oh yeah, I wanted to check Roku because I have a little bit of a position there. Oh yeah, somebody said inverse head and shoulders. Oh yeah, look at that. There you go. Little inverse head and shoulders. These are interesting patterns, right? Especially at bottoms, they can mark bottoms. You know, you get this kind of fake out over here, then you kind of pull in here. So, you know, a measured move, it's all psychology. You know, it's all psychology. That's what these patterns are. It's just representing psychology. So a measured move would be from that neckline to the low, and you go, you know, activate drawing, and it'll probably put us right at the VWAP, you know. It's crazy. So that would be the measured move. So maybe Roku comes back into and around that. Maybe it doesn't. I don't know. It came into its 2 standard deviation move down here. So it makes sense to look for the selling and then try to get in. Right? I have a few shares. I took I would have preferred to build into it a little bit better. But trimo. I don't really need to hold on to it. Yeah, so let me see. Give me a second. I'm just dumping half. A nice little scalp there, you know? Little $50. Technically could go down to 0 again if we start breaking down, but locked in at least for right now, and we'll keep a little runner on, see if it moves. And then I'm going to stop paying attention to it because I don't really care. It's not really a sizable position to do anything. Okay. Okay. SPY is still just kind of pulling itself a little bit higher here, and we are right near that 685 right now. Still kind of just chopping around. And then marking that flow, still bullish. Ignore these spikes. I know people are going to look at this like, whoa, what happened? There's typically some sort of big hedging activity that takes place. Just pay attention to it. I hate how it just distorts it too.
So just clarifying,
But
that
I ignore
Morgan
the
Stanley
spikes.
Story
Right, ignore the
is
spikes.
considering offloading some of its data center exposure
still
via
good,
a
though.
significant risk transfer and has held prelim talks with potential investors about such a prospect, albeit though SRTs backed by data center exposure are still a nascent slice of the credit risk transfer market.
SPX target for the day. I mean, for today, I would still say daily expected move. I mean, we're right there, 68.64, and we're holding above 68.50. That's the biggest focal point strike from a zero DTE perspective. So if we can hold above it, I mean, you know, we could press into the daily EM or come right back into 68.50, kind of just in that floating in that zone. Market net flow is still bullish, so it's starting to turn gray here. That's great. That means we're losing convergence. And when you lose convergence, the market is just stalling out and or comes in. So that's annoying. But if we can kind of get through that, once again, it's surprisingly enough, like, right, it looks easy because we just went up today, but we really didn't. There was actually some pretty wide range bars within here. So it was actually a really choppy day. The bears actually had a great opportunity to take advantage of today's market to bring it down, but they dropped the ball. They usually do. Would UNH have a inverse head and shoulders? On what time frame? Not this time frame. This is straight up. Oh, over here, daily probably. Yeah, exactly. Yeah, I'd say that's a little one. Don't get too wrapped up in like the exact pattern or whatever, but yeah, right. You got this, and then you got this right here. So yeah. And we're coming right into what? We're coming into the year-to-date VWAP. It's up 4% on the trading session today. So I'd prefer to see this kind of consolidate because you know if you chase into these key levels, right? Yeah, you can get follow through or breakthroughs of these, but more ideal to find the tighter consolidations. I used to have UNH. I was trading around through these areas and up through here. I don't have a position anymore. Bear's been dropping the ball since 1920, since the S&P 500 came out, actually. Forever. As the market's one step away from all-time highs. No, when they step in strong. That's why it's always that this saying comes, you know, stairs up, elevator down. Which makes sense because that's the gamma flip line. You know, it elevators down because when you're negative gamma, you get vol control funds selling into it, you get CTAs selling into it, you get dealers selling into sell side activity, buying into buy side activity. You get massive moves. What's up, Palm Tree? Is Neo dead? You know what? I want to go look at Rivian now that you mentioned that because Rivian looked like it was setting up. Ah, man, I missed it. I knew it. I was too chicken. You want to know how I knew this was going to do this? And it might still go. Actually, this is actually not a bad look as it's back above 20, 50, you know, year to date 200. It would be nice to get more consolidation. But the reason why I thought this was going to be the case is because earnings came out, big, strong move, right? Big volume, big, strong move. Then we pull in a little bit, and then all of a sudden we break higher on bigger bulge or volume. I was like, okay, this is getting ready. But what was so nice about recent price action is because look at the pull down from here to down here. That was, you know, 23% drawdown, which is big, into these averages. But look at the volume. It turned into nothing. It dried up. So you get a strong move up on volume, and then you get a massive retracement on like nothing. And then all of a sudden you start breaking through here. It made sense. It just made sense. And from this point, you know, would be more of a buy signal, a buy point, about 14%. I didn't take it, and I know it's easy in hindsight, but this was one that I talked about on live multiple times. And that's how it played out. So now, right? Now I would prefer, like, because once again, you asked, where did the market come from? Well, it came from down here in a very short period of time. So I don't chase these levels. I would prefer, you know, 6-7 days of consolidation. Come up here, come in, let these averages catch up a little bit. If it did that, which, you know, I can't say that it will, because after some strength, you typically get some follow through. But if we were granted a better risk to reward, like these, that to me would be like, okay, you can target a potential level up into the 20s. You know? Neo, I don't even know what, I'd stick away from Chinese names right now. This is a China name, right? China Equity. China's been kind of a little bit all over the place. Let me go pull up KWeb. Yeah, it's not looking all too hot right now. Baba, just kind of lower highs, consolidating. Impartial to China names right now. I don't have any China exposure. I don't think. I mean, I guess in a weird way I do. It's not a direct ADR or anything like that, but like, you know, some companies that I trade will have exposure to China. You know, so. TXG. Oh yeah, let's pull that guy up. This was a trade idea as well. Who asked that? Dan Muir. Asking about a name that actually looks like it's setting up. Good job. Good stuff. So TXG, we talked about as it was getting tight down here, I believe. And if not, I know for a fact we talked about it right here. Why? Because, once again, let me zoom in. Price action gets tight. We saw a nice breakout on good volume. Price consolidated into these averages on what? Low volume. Then all of a sudden, oh wait, no. See, yes, pulled in. This was where we decided to, I think I put that as a trade idea or talked about it on a video. I don't remember, whatever. I talked about it. Bam, we break out on strong volume. Now what's it doing? Dude, it's setting up again. It's setting up again. So yeah, we'll probably take 2034 again. Okay. Maybe give us a little bit more time here. Maybe a little bit of an undercut and then come in. That would be great. But the volume drying up after already sudden move. So yeah, I'd like to see it pull in a little bit more. I would. But it is flagging. After a strong breakout, consolidating on low volume, breakout on high volume, consolidating on low volume. In a area or a sector industry that has been showing outperformance. Strong stocks typically get stronger, right? So if you have higher lows, higher highs, they typically get stronger. So yeah, chances are we'll take that out at some point. Okay. So if I were to do this now, but we haven't really came in that much, like for me, I did trade. I did have a position in TXG. I don't think I held it up here though. I think this day I pretty much got out of it, which was once again just getting out too early. It happens. I mean, in hindsight, sometimes it's great, but the market was kind of acting funky, so I was just like, I'm just reducing my exposure. I've came far and fast this year. So if I was to do it right now and say, yeah, I'm going to enter in, like my stop would be what right here. So chances are I'm getting stopped out if that was the case. So I would say, okay, maybe I would say if it comes down under this low, which is, minus 17%. So the position size would have to be small to start. So I don't mind doing a starter position in something like this. And if it comes down more, undercuts, whatever, and basically builds out, and then I can enter into a little bit more size, but it'd have to be a starter position. And given that it's high beta, just to move up to here is 13%. It'd have to be something, sometimes a little bit under a starter position. So probably like 1% of my portfolio, maybe a little bit less. I can't do like a 10% position. It's going to move my entire account, potentially for the good, but also potentially for the bad. So I like to, start slow and not have to sit around and worry about it, especially if I only have 20% invested in my portfolio right now. And then all of a sudden I come in, I'm like, hey, here's another 10% on one stock. Nothing else that I have in the portfolio is even going to matter at that point. It's all going to be focused there. I did that with ARQT, ARQT. And I was like, what happened? I traded it and then like it was up this day over here. And I was like, what is going on? It was like moving my entire portfolio. And I'm like, oh my gosh, I didn't like do the proper adjustment. So I was like, I got to get out of it. I didn't get out of the whole thing, but I scaled some out of it and I scaled some out of it to make it like a much more like, I didn't need this name to move my entire portfolio. Some people prefer that, by the way. I don't. But this thing, ripped 30%. So in hindsight, yeah, I would have loved to go 100% in. I wouldn't sleep at night, but I'd feel good now. Nice, nice. Do I plan on starting a trading room? I don't know. That'd be cool. Maybe do something in the future. I have another baby on the way, so that's like soon. It's like next month. So I gotta adjust before committing to anything. Just tap it in. Just tap it in. So we're still holding 684. Under 684, I'm not a huge fan of. Kind of just floating in that range, right? It's just a lot of chop there. So I just, I'm not interested. Not interested right now. Okay, we have some other names popping up here on the list. Let's take a look here. I do take macro analysis into effect. I do put a lot of weight on technicals, but macro. Look at it. If you can predict GDP, if you can predict where GDP is going to go, right, you're going to have a huge advantage to where markets can go, right? And that goes for any country that reports the GDPs, right? you'll have a huge advantage. So yeah, macro analysis is important, but you need models, right? You need models, you need ideas. And then on top of that, the macro, footprint will give you an idea of maybe what sectors and industries will perform best in those certain categories. Like, in this environment, maybe low beta works. In that environment, maybe momentum works and high beta. Maybe in this environment, industrials work better and materials. And maybe in this environment, energy performs better. And if you can model out stuff like that, awesome, cool. But yeah, it's important. You look at it, but then you need to still have your timing down because you can still be wrong, and that's where the technicals come in. So it goes, macro to drive you into the certain areas. Then you go into the fundamentals of a potential company, and if it makes sense, then you go from there, and then it just goes to technicals. I don't get too wrapped up in the fundamentals and narratives and talk about that too much. I like to keep it more simple. And a lot of the times price leads the way in a lot of things. But then again, if you had models that can forecast that kind of stuff, it gets you into stuff that might not look great at the beginning, but turns to be a great trade for a trader. It'd be up to 20 to 60 days. For shorter term traders, not necessarily investing, but trading. Yeah, I'm in the SAC, the outer area SAC. Yeah, Nappy. I actually like TAP too, TAP. Yeah, that was actually one that I was watching. You're right. Yeah, good call. That was on the tight list for a couple of weeks now, I think. It was over here and then over here. So yeah, TAP, and the 50 day is starting to curl back around here, and the 20 day. I haven't had a position yet. The larger time frames are obviously down over here, but it is basing and it is getting tight. So the risk to reward from even just from here to here, it's good. 2 to 1, 3 to 1 ish. So you definitely need models. Yeah, can't sell bikinis without them. Yeah, market net flows right here. Yeah, ignore the spikes if that's what you're discussing. Ignore the spikes. It's typically some big hedge activity or something like that. I never pay attention to spikes like this. So I would just forget about that and then just look at it. It is curling up still. I hate how it distorts it. They do got to fix that, but still bullish flow. And we're kind of at that gamma exposure level at 684. You do want to hold 684 here. Underneath it, I'd be a little bit more cautious. It probably would float in and around it. That's 684 here, this green level. It's a bigger level, right? And it could reflect off of it. But if it get underneath it, it can push away from that price too. So how do I keep track of all this? What specifically, double? XLP hit 10%, recently hit 10 bullish percent. And has bigger insider buying relative to SPY. I think I understand what you're saying there. Yeah, I mean, there's a lot of value in a lot of value names got smashed, right? Like a lot of consumer staple names have been destroyed. So the fact that people might want to start rotating into them at some point here makes sense, because if you actually take a relative chart of XLP versus the SPY, we just hit all-time lows. Meaning XLP is underperforming SPY by records. And sometimes when you see that, it's like, okay, well, the SPY's at all-time highs, consumer staples been getting smashed, maybe I should start rotating into some of this stuff. Yeah, it makes sense, I guess, right? You live out in Modesto? Cool. I got family out in Turlock. Some fam. What happens in the... Yeah, exactly. Okay, so we have a couple names here. CRISPR. CRISPA. Yeah, so... Looks good. I mean, we pulled into this area. Nice, strong pullback. And now we're starting to break out right here. So yeah, CRISPR, right? Stop would be down here or down here. You'd play it to the upside. Makes sense, right? You don't go oversize it because it's already ran too much. I mean, it's up 6. I mean, not really, but that's typical moves here. But, you know, minus 13% or minus 8%. So you don't go too big on these because unless you're willing to lose that. This is outside the 1 standard deviation move. So, you know, for me, I'd have to go smaller once again and then play it up into these areas. It looks good as it's starting to break out here. But maybe perhaps tomorrow we can pull in a little bit and then try to go for it. But yeah, the good looking chart, and it's breaking out of a little tight wedge. So yeah, good call on Christopher Bambino deck. Trying to make it stage a little bit of a comeback here, but it's still in pretty bearish condition. So maybe we're going up for a gap fill, and then maybe we consolidate and go from there. But it's already, you know, once again, you ask, hey, where did it come from? It came from down here relatively quick. So you got to see it consolidate. I personally got to see it consolidate. And this could be just happening because a lot of retail names are moving right now. Look at Tesla. Tesla's up 3%. This one looks like it's going for highs, like new all-time highs. I mean, it's a stone's throw away. It ain't far. A little shakeout down here. We'll see. APO. Yeah, nice little, you know, tight consolidations breaking out. It's just you're fighting a 200-day moving average that's declining in a year to date. So maybe we get some more sideways price action into this, or we break out and then kind of pull back in and consolidate and try to break out from there. TSCO, Tractor Supply. This one's really been respecting kind of just the declining 50-day here. So, and then price action is getting tight. So either this breaks down and, you know, we get a flush out of this tightness, or we can kind of recoup this area. So these start to turn back up, and it looks a lot better throughout here from that point. So it's kind of in that decision mode here. Some might call this a diamond formation. Whatever. Call it whatever you want. Doesn't matter. Hey, think SPSSPSSPSSPSSPS. I'm glad you like it, man. I'm glad I was worth it for you. Zero expiration. Yeah, you got to be part Portuguese. Yeah. Yeah, I am. Yes. My dad's born, raised, purebred Portuguese. From the Azore Islands. Spico. What's up, Doppler? Yeah, they lived in Turlock. They actually were neighbors with Colin Kaepernick. Or like right there, right down the road from Colin. He was from this same area there. I think it was, yeah, I think so. Or sorry, not him. It was his family, but he was always there as a kid. So, out in Turlock. Colin Kaepernick was the quarterback for the Niners. SPY is still just kind of SPY is coiling up right now. This thing wants to move. Look how tight this thing is going. ESA getting very, very tight. Look at, even like if I'm looking at NQ, just look how tight these price action is. This is crazy. Holy macaronis. It's going to break in a direction here. You can tell. You can just sense it. Which way will it go? Oh, which way do you go? It should go down. What? No. I mean, this was the key level that we're watching in for. Market net flow is still, well, it's kind of flattening out here. So unfortunately, it ain't giving us much. If it was a lot clearer picture, I'd be like, yeah, this is, higher probability of it happening. But what I will say is price action's been moving up higher, and now we have consolidation. This could be considered a bullish consolidation. That's what that would be. So based off of that, you would think that price would go higher. Now, if it starts breaking down from here and under 684, then I'd say, yeah, watch out, because now we can chop around or potentially push from 684. But we're above that. We're above 684, and 684 is this large GEX level here, and 685 is right above us. 684, we're above it. It can push price away, but if we get under it, it could also push price down. So the bias would be long. That would be the bias. Given price action, market net flow, I wouldn't fight that. But the bias, it's kind of still turning up over here. That's kind of nice. It's, it's not the greatest, but we're 50 cents away. Just push it up there and just get done with it. That's what I say. Push it and get done with it. Yeah, I looked at it. It's ignore spikes. The spikes are irrelevant. There's typically some sort of a order or something that happens or hedge, but if I always ignore spikes and I just kind of continue on, right? I learned that from the people that designed this program, by the way. They tell you that. Just don't ignore spikes. They're annoying. They happen on occasion, though. Do you like JLL? JLL. Jones Lang LaSalle. Yeah, this actually looks pretty good. I have no idea what it is. But yeah, I mean, yeah, we just broke out to highs and it's kind of just flagging out, consolidating here. It doesn't look bad. Holy macaroni. Yeah, looks good. Strong looking chart, getting a little bit of a consolidation after a little breakout there. GUI has a nice bullish consolidation. It does, but I will say it kind of came far and fast. So yeah, this does look like it wants to go higher, that's for sure. I would prefer to see this consolidate more, but I hardly get what I want. I will say this was a nice consolidation over here. Then over here was a great consolidation as well. Here's a lot shorter of a consolidation after a really strong move, which would just mean that, hey, if we continue up higher, you want to be a little bit more aggressive on profit taking because we can be in for a period of consolidation. Yeah, no. All right, so we're kind of breaking this little tight contraction here. Push, push, push. Can you take me higher? The name of the Discord. Osprey, if you check the pinned comment, I think I left a pinned comment. It's you do it through Patreon. You go through Patreon, and then you have to sync your Discord up. TPL or LB, any of these? Let's take a look. TPL or LB? TPL. I'm not a fan of the chart here. It doesn't look all too healthy. I mean, it's getting a nice, pop today into a lot of noise. So I'm not a huge fan of this type of chart or setup. I don't really know how to trade that. LB, it's kind of same thing here. It's just sideways. So, you're getting big pops, but then again, you get big drops. So this is a little bit these are too noisy for me. Just too noisy. I need tighter, cleaner price action. So for example, like here, right? That looks way better where you get tighter price action after a move higher above a couple averages. So my thought would be that it would probably come to here, not up here. I wouldn't think that, but a little bit too loud for me. Asansa, new high of day. Let's see. Yeah, that thing's still pushing. A lot of names are pushing right now. HG. HG looks like it's a little illiquid. Let's see here. I mean, it's enough to swing trade, I guess. Yeah, it's doing good. It's doing really good. Just look for more consolidations, right? We had some that popped up. Now we're coming back to these averages. So it's holding up. I'd like to see a little bit longer consolidation here. Something like that. Then I feel more comfortable. GTX. Yeah, this would be a post-earnings consolidation here. Holding strong. I remember looking at that name back at like $6. A long time ago, though. HPQ. Hewlett Packard. I'm not a fan of the setup. There's really no setup right now. Like I can't just go long here, and then there's just all this stuff above us. Declining 50, declining 200. You know, hit me up if it's back up here. It's starting to do this with these averages start turning back up and gives me better risk to reward. It's a little bit too far out. If I buy here, like, I might be right in the long run, but what if it just goes sideways more and goes like that, for years? I don't want my money to get caught up in a move. Like I don't want to put in capital and it not move for 3 years. I want it to move right away, right? And I want it to move in my favor. And I want to know exactly when I'm going to be wrong, how fast I can be wrong, Hey, what's up, Goku? Val looks great. I mean, this thing just broke out. Boom. Yeah, nice move there. Yeah, and that's breaking out a little bit longer of a base, the ones that I like to see. So, I don't prefer to chase up here, but, if you're thinking a longer term hold, that's good to see a base breakout like that, and you see pockets of some good volume. So, yeah, that looks bad. That looks fine. That looks good. And then SM you mentioned. A little bit different of a setup over here, right? It looks a lot different. This one's, yeah, maybe it's breaking out of this little thing, but it's still fighting. Think of it like this. This right here would be the equivalent of you swimming up a river because the trend's down, clearly. So you jump in the river and you're like, hey, you know what? I'm just going to kind of swim upstream. And you'll be able to do that for a while, but then all of a sudden you're going to be like, okay, I give up. And then you come back up. And then, eventually, these things will start to flatten out and turn around and so forth. But I'm not in DKNG, no. But we did look at it right here. Woo! We had a bearish earnings reaction, turned into a good reaction, nice consolidation, and then some nice follow through. ANIP. I don't know, that sounds familiar, but a pharmaceutical company. It's just too everywhere, right? It's consolidating here, but it's also under a declining 200-day. It's under the 50-day. It's pressing down. So once again, like I go ahead, go up higher, set back up, set up. But right now you're like, see volume on the way down, and now it's kind of just consolidating a little bit in this little box here. Not my favorite. You tried to get into CRISPR and it ran. Yeah, it looks pretty good. Look at this thing go. It's still going. Ew. It's okay. Maybe tomorrow it'll come in. Or maybe it'll just gap up and go right to the 50-day. And then I'll be like, okay, whatever. You miss it. You got to be okay with missing names. You got to be okay with it. You have plenty of opportunities. Tiva. Yeah, Tiva is up there. It's way up there. That's up there. I wouldn't be buying here, but maybe look for consolidations. There was one right there after earnings. That was great. That thing is flying. Oh yeah, I should watch the. It didn't really move. Almost. Maybe we'll get there. Push it, push it, push it. Mechanic Matt, you did not miss much. We did break out of this little tight little consolidation here of the 15-minute time frame, and we're trying to target up at 685. It looks like it wants to get there, but will it do it? I think it will. But what do I know? But what do I know? I don't know anything. Oh, come on. What is going on here? Click it. Click it. Click it. There we go. Nice. Okay. I'll take it. I'll take that. Okay. Yeah, Zanir, you're not wrong. But the thing is, when as an industry and sector it's doing really well, you do want to pay attention to that, right? You don't need to go into individual names because they do get very risky. Pharmaceutical, biotechs, they can get very, very risky. But if there is money flowing into these sectors or these industries, you can look at ETFs to maybe reduce that volatility, smaller positions, you know, and not single stock risk. That's always an option. Or bigger names that are more well-known, right? Like Gilead, right? Still do good in these names. Look at Gilead. Gilead's still looking great. It was this is, I love these bases. Big old base here, little shakeouts here, but now, you know, it's kind of consolidating. Bullish trend. It looks pretty good, right? Did I comment on AMTM? No, I don't know what that is. I have no idea what this is. A holdings company for what? It's industrials, okay. Engineering technology, United States. Okay, cool. That was a big earnings move. It's actually interesting. So you get this huge volume day over here leading into earnings. Oh, okay. Interesting. Then we kind of pull in a little bit and then earnings breaks it out to the upside. And now we have a post-earnings consolidation. You know, I mean, I like these type of setups. I'm not too familiar with this name. It could be bigger than what I'm thinking of in my head. I don't know like the market cap or anything. I got to pull that up, but I do like post-earning consolidations like this. So if you break out, it's just crazy to me. Like if you buy right now, a move right up to here is 10%. High beta, very high beta. I love it. I love high beta. It means that I can put less capital at risk. Have a boy. He does sleep good. He does. After 40,000 songs. Oh, give me a second. Hey, y'all, give me a second. I'll be right back. I'm gonna go ahead and put up this SPY chart and this. I have construction here in my house, so I'm gonna put this up. I'll be right back. Okay. Be right back. Okay, I'm back. Check you. Okay. I'll pull up a couple other names. What happened since I've been gone? Let me think. It just needed me to come back and crank this market to the upside. Let's do it. So 685 is still the main level. SPY, kind of just going sideways here. Had to pick the color for the stucco on, we're doing an imperfect smooth stucco for the outdoor barbecue. Is Apple getting overbought? Yeah, I mean, you asked, where did price come from in these last trading sessions? Yeah, I mean, we'll probably need to see this consolidate. I mean, that would be better, right? I don't know if I consider it overbought or how you define it personally, but yeah, it came from here to here in a snap. So yeah, see it consolidate a little bit, let the averages catch up. Mm-hmm. Did go with hot pink, yes. That was the decision. Hey, what's up, Smelly? Smelly, I mentioned you actually earlier in the what's it called, talking about the Microsoft at the pretty much the beginning of the stream. Smelly talked about the 2 standard deviation move here that you brought up in the chat. Oh yeah, which reminds me, the Roku did the same thing, and here's the Roku trade how it played out. Came into that VWAP. I no longer have a position, but you trade it down throughout here or whatever the case is, and somebody called out the inverse head and shoulder, and then the target would have been that VWAP there. So nice little intraday trade based off of just those Astro alerts. And if you traded it here, cool. If not, now at least you get to observe and see what that looks like and what it could do. Circle, CRCL. I mean, I don't know, maybe. I mean, a bottom would be typically longer than this. I mean, bottoms are somewhat easy to find, but it's a bottom. I don't know if it's the bottom. Probably come back up into this range up in here, 120-ish. TLT. Yeah, I mean, I traded TLT. I don't have the position anymore. I got out of it today. Probably, once again, too early. But I talked about it on the close of business this day because of this crazy move right here. So the video from that day or from this night was basically saying this could be an opportunity to buy it for, a fade bounce, like, right? Because it came down hard to fade bounce. So if you bought it in the morning or a little bit later, you got a nice big pop. And then today we had some follow through. So yeah, to see this come in a little bit here makes sense, but still kind of just been going sideways. The only thing that I am a little hesitant on is, let me see if I can get this photo up. I put this photo up, but I forgot to post it. Did I delete it? Oh my gosh. No. Give me a second. Because I don't know the ticker on TOS. By the way, we're right there, guys. We're right there. Hallelujah. Stock charts. We're going for it. Let's go. Stock charts. Is it April 1? I can't remember. JPY. No. That's definitely not it. Frick. Let me think. Why would I have deleted that? That was an accident. Aha. Yeah, ha, ha, ha. I found it. It's in my trash pan. Hey, where'd it go? Uh-huh. Share. To air. Why isn't it showing? Aha. There it did. Share. Okay. This. So this is the 10-year yield. Waha. Right? So when this goes down, it's good for TLT, right? Obviously. Or yields go down, bonds go up, whatever proxy you use. This is the 10-year for Japan. And as you've probably been hearing, that Japan 10-year yield and 30-year, yeah, they've been flying. And typically, throughout history, the bulk of the time, the 10-year yield in U.S. and the Japan 10-year yield, the correlation is typically above zero, right? You can see down here, this is a 20-day correlation, and it's typically above zero, meaning that there's somewhat of a positive correlation, right? And you go back many years, you'll see the same thing, and you'll have every once in a while some spikes down low. In fact, this negative correlation, to be this negative is more rare than anything. Meaning that what? The 10-year is going up, right? The Japan's going up, 10-year yield for US is going down. So that's what's causing this negative correlation. So the reason why I say this is because if these things go back to positively correlated, there's a possibility that maybe the 10-year yield goes higher. And if that's the case, then that's probably not the greatest for bonds. And what I find interesting here is we're moving into this president's midterm. So Trump's second year from this term in office. And I was watching how the dollar responded in one of my last videos here. You know, we looked at the dollar, $ DXY, trade weighted dollar. And this, if you remember this year right here, remember it, look at it right here, okay? The dollar's going down again, right? If you actually go to his first term in office, 2017, the correlation between the two is at like 0.83, meaning that it's like the same thing. The same thing is happening. And I shared a chart. I don't have it in front of me, so I can't share it right now. But basically, if it does continue to follow, that means the dollar can, fall into January or into February. Like goes like this, and then all of a sudden it drops off into February like this. Okay. If that correlation holds, and if I can show you here, if I go back to 2017, right here, this is 2017. It looks the same. It's the same thing. We found a low in September. We went up, and then this is what I mean by it can go down. Boom. And not to say that it's going to play out the same way into February like this, but if it does, that means the dollar's going to fall off. Now, what I did was I was like, okay, well, what did the 10-year yield do? The 10-year yield in 2017, well, first off, the correlation between the 10-year yield this year and Trump's first year now and his first year, there is really not a strong correlation. Yeah, it's positive, but it's not a strong correlation. But what I do find interesting is if it all of a sudden begins to correlate, this is what I find so interesting is that here's 2017, right? Not the same look by any means. 2017. And then going into midterms, though, look what the 10-year did. Fa-boom! Into February. So the dollar fell, bam! And then the 10-year yield shot up. And this caused chaos in the S&P 500. In like a few days' time, a week, it was down like 13%. So I'm not saying that this is going to be the same thing that happens, but I go back to this chart. I'm like, it's negatively correlated. They're typically more correlated. The 10-year yield in Japan's flying up, and then we're moving into this period where seasonally, if it does match, it means the 10-year yield can rise pretty dramatically. And if the 10-year yield rises pretty dramatically and the dollar's starting to continue to fall, man, we're walking into 2026. That can actually be quite volatile. Quite the narrative right there, I should say, right? Quite the narrative. Okay, so what leads the 10-year yield? Great question. Glad you asked. Oil. And what's oil doing? Oil ain't doing nothing. Oil's in a bearish trend. So if the oil breaks down, 10-year yield will probably follow suit. But for whatever reason, oil starts to catch a bid and starts to move up higher. Probably tells me that the 10-year yield is going to go up higher too. And now you're starting to see energy, like today, outperform. And it's actually, from an absolute perspective, doing pretty good too. And if energy names outperform the S&P 500, that historically is not good. I know. You're probably like, well, prove it. Prove it, dude. I don't need to prove anything. Look it up yourself. No, I'll show you. Give me a second. I can't remember where I put the chart, though, so it's going to take me a moment. Summary. That's what I thought. Oh, my goodness. That's not what I wanted. Damn it. Dumb. What? Give me a second. Yep, you're right, Mechanic Matt. I can pull that chart back up too. I'm looking for a chart right now. I got to organize this better. Watch. Chart view. No. Summary. Here we go. How did I get on this topic? I forget. Dude, come on. Where did I put this thing? Where did you go? Aha! And I found it. This chart. This chart. So this is energy relative to the S&P 500, meaning that if this line goes up, energy is outperforming the S&P 500, which it's doing today. What do you see the S&P 500 down here doing while that green line goes up? It underperforms. So one would say that if all of a sudden oil starts doing better and energy stocks doing better and this line goes up, chances are we're in some more sideways chop or pullback. And then Matt brought up the farmer's chart, the farmer's cycle from the 1800s. That chart is just interesting. I don't know its predictive value, but it's kind of cool, you know? It's kind of cool. This was by Samuel Benner, something like that, from 1875. And it's just marking out like cycles of when, periods to make money and so forth. And it is just kind of interesting that here, over here was like a peak in 1999, right? And then over here, you had a peak in 2007. You had a peak over here in 2019. And now we're moving into 2026. And there's like a cycle peak here. That's crazy. That's crazy. It is kind of crazy. You can't really make a trade idea based off of that, all this narrative and stuff, but it is still worth noting because if things suddenly shift and adjust, I mean, I gotta pay attention, right? And I look for that stuff on a shorter term basis. Market conditions changing. Will market conditions change? It's important to watch. Did we get there? No. I mean, we're 8 cents away. Oh, come on. Just give it to us. All right. So we came into 8 cents into that gamma exposure level, 8 cents away. And the SPX came in. I mean, this is almost a $7,000 product. The high was 68.62. We were $2 away. It still might get there. Who knows? But yeah. Close enough. I don't trade leaps. I don't really trade options. But a lot of the stuff that I mention and say or bring up, you can trade options around it or structure trades, whether that's leaps, spreads, whatever the case is. Head and shoulders forming on what? The S&P 500? No, you're not crazy. Kind of looks like that. More of an advanced head and shoulders, right? If you look at that as the neckline. But, you know, we'll see if it gets up there. I mean, we're a stone's throw away from 7,000. Just get it. Just get us there. Just get us to 7,000. Just make it happen. Get people excited. Buy a couple hats that say 7,000 S&P 500. We're right there. Just do it. Get up to 7,000. Just go. 7,000 is an important level. That's the JPM caller. That's the call wall. That's where a lot of focus is. You can look at that. You look at the net gamma. Bam, there's 7,000 right there. Right here, 6,900. So, you know, we're about 40 points away from 6,900. This is going to be hard to break through. Probably get hung up there at 6,900, right around there. If we can get there, get above it, you know, I'd be shocked if we don't see 7,000. Shock. I don't think I looked at DLL. I can look at it now. Woo. Let me change this. I'll do 1 year. It's a little all over the place for me. A little choppy and sloppy. And this is coming after an earnings breakdown move. So you get earnings move downwards, and now you're getting an earnings consolidation. So it has to prove itself to me, because I typically look for an earnings bullish move and then a consolidation like this, and I trade it to the upside. I don't like shorting, but you know, on the flip side of this, there's your this, and then there's, you know, that. So, you know, can this over here be wrong? Yes. And can over this be wrong? Yes. But price has to prove itself first. Shacuse. Oh man, this is moving. Okay. Let me give me a second here. Just get a little bit out of this. Just locking in. Gotta lock in, you know. Locking in. Mike's locking in. I already locked in that. Oh, you know what? I want to just look at that. You know, earlier today we said we'll follow back up on McDonald's. Man, this thing kept on going. So we're talking about how the higher probability is coming back to and around the 2 standard deviation move, but I also said I wouldn't short it. I guess we're kind of like right there still. 3.0, about 39 basis points away. The reason why I brought that up too is because I still have a position in McDonald's, Mickey D's. Good old McDonald's. Qualcomm. It doesn't look horrible. I would just like to see some consolidations now. So maybe if we pop up and then start to, you know, consolidate a little bit, have this 20-day start to turn around. That'd look good. Yeah, it would look good like that. You know, you're kind of breaking this right here, so maybe even a back test. But you know, I don't want to enter here because we came from here to here in a short period of time. So I need the consolidation to happen. Oracle. You got earnings around the corner. I'm not interested. Not interested. You'll probably get bounces. Obviously, you will at some point, but you know, maybe if it was down here and we looked at it, I'm like, okay, yeah, now it looks like a bounce. But I would say, oh, I wish we saw a lot more volume, kind of like MicroStrategy did. You know, you go to MicroStrategy and what did it do? Is down, 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 and bam, big hammer candle with volume. Any big earnings after the bell? What is today? Wednesday, December 3rd after the close. We got this. Wait, did Snowflake, isn't Snowflake reporting, or did they already report? Looks like, did Snowflake already report? Was it early? I thought they were supposed to be out after the bell. Did I get that confused? No, they haven't reported. That's after the bell. So Snowflake. Right? For some reason, I thought they reported. $25 expected move, basically, for Snowflake. And then we had, I believe, CRM. That's after the bell, and you're looking at about a $19 expected move in CRM. Those are the bigger ones. You have AI. You have Path. Five Below. Some other random ones. Tilly's, TLYS. This could be interesting. Oh man, they're already ramping it. The only reason why I say this kind of stuff is interesting is like the retail sector has been kind of doing good. Like, you know, so maybe it follows suit. Look at AEO, right? Look at this, great consolidations on AEO. Boom, like killer setups. So yeah, we'll see if Tilly's kind of follows suit there. Dollar General. The Dollar General. Yeah, this is looking, shaping up. I was looking at it over these places, and then it kind of just went longer. But yeah, this looks pretty good. Getting back above all these key averages. I mean, I would prefer it to kind of consolidate now. But you do have, oh, you're talking about earnings probably, right? Oh yeah, I guess, I don't know if that's considered big or not, but almost $9 expected to move on DG. Oh, after hours, that's what you meant. TMF, isn't that like a leveraged fund? Yeah, for Treasury. APLD. Applied Digital. Yeah, I mean, once again, I'd prefer to see consolidations. This is a, you know, where did it come from? It came from down here. It went really fast. Can look down like this. Bang him. It would actually be kind of nice if it kind of consolidated in here, or maybe went a little bit higher and then consolidated out of it. But yeah, if I enter now, it's like it's already kind of ran a little bit, so I just prefer to see these consolidations. I have no idea what CRM is going to do on earnings. It's too much of a coin toss for me to make like a prediction. I mean, look at the stock's been heading lower. The trend is low. So based off of price action low, you would think that it would go lower. But then again, earnings, right? Who knows? They can be great earnings and the market still doesn't like it. Or it's horrible earnings and the market blasted off saying that's going to be the worst earnings it has, and now we're going higher, right? I just have no idea. All I do know is what the market's pricing in for risk, and that's about $20. Just about. Up or down, by the way. There's a high probability of us tagging that.
The international trade data and goods and services will be released on the December 11th. That's the September reports. Will be released on
PANW.
December the 11th.
I mean, this is just a post-earnings
And the
consolidation.
October
so
monthly
earnings,
retail sales will be released
consolidating.
on December 16th.
More of a bearish earnings move. So it is reclaiming the year-to-date VWAP, but yeah, once again, I don't care about these type of setups. It actually hasn't gone anywhere all year. That's crazy. It's just been sideways. Like there ain't no trend really. It's got to prove itself. All right, let's take a look at the S&P 500. Coming off a little bit after getting near its GEX exposure. Got to hold that 684. 684 is still above it. Still the pull at 685. Could it be setting up? It'd actually be kind of interesting if it came down here. A little bounce play or something. No, where are you at? 684. No. Interested if we can come down to 684. What's up, Exotic? How you doing, man? Best sort of AIE and sour on. Yeah, I don't even know. I haven't looked in that company much. Should probably tell everyone. I think I actually already said it, but I did that Roku trade. I quietly got into that. But I'm not in it anymore. So, you know, I think I've already said that, but if I didn't, I don't have a position. Oh, and you know what? I forgot about Microsoft. I forgot about that. I did end up trading Microsoft, and I still had that position in there. I wasn't planning on holding it, though. So I didn't trade. I was looking at it over here, and then I didn't trade it, and then the news came out. And I'm like, well, I can't chase it. Then I traded it over here. I took a little bit of a profit, and then it came back to VWAP, and I think I traded about 100 shares. So it was nothing of size, and I got out of like 75 shares up here. I entered back into the 75 shares, and then we started moving up higher again, and I got out of those 75 shares. So yeah, I still have the 25 shares, so small. I'm just going to cut it because I don't really need that right now. So I'll just cut that now. It was a day trade. That was good for, you know, $180 or something like that, I think, total. I forgot that I had it on.
Doing a commentary here from Iraq's armed forces. His attack on the Khor gas field was carried out using
That's
two
not in my-
drones, one that hit the field and another
Wait,
that fell
that's not in my
outside it.
United States Investing Championship account. That is it's just in this account, which I do more shorter term trades and on occasion some swing trades there too. I have DRH in here for some reason still too. I don't know why. Probably don't need that in there. I played it over here and then nice pop off, and it looks like I did take off some profits. I don't need it in this account though, so I'm gonna go ahead and close that out of this account. I don't need it there. Shuck yous. Cool. Apple coming in, yeah, sitting at around lows of the day. That'll have a little bit of a pull on this market. That's for sure. Nvidia doing the same thing. That'll pull in the market. Market hasn't really pulled much though. I mean, I'm looking at that 684. Not quite there. Take me to 684. Tesla holding up things at 4% up on the day and at highs. Google, of course, at highs of the day. When is it not? CRISPR hit a 2 standard deviation move today. That thing kept on going. Ain't no pullback for us. And this is happening after this breakout over here. That little tight consolidation. Did not let it breathe. I'll definitely be looking to see if it pulls back into this area though. Feels like it's going to get away though. Too bad, so sad.
Some commentary from US President Trump. He says that the US will have a big percentage of the chip market very soon.
Oh, I'm tired and hungry. I'm tired and hungry. I feel like we went over a lot of everyone else's names, but I didn't really go over any of my setups that I'm looking at. People don't ask that. Actually, that's actually surprising. A lot of people are asking about names that they're looking at, but hardly anybody's saying, dude, what are you looking at? I feel like that's trading though. Trading, typically wants to find their own way, their own path, their own setups. That's part of the, part of the fun of trading is finding out your own stuff. Shib, dude, what are you looking at? MMM, so 3M. I liked how this was consolidating here. We had a little bit of a breakout, but kind of sat on itself, new high on the year, but I like the consolidation. So that was good. I do have a position on, just a starter position. I traded in and around it actually. So throughout here, and then it was starting to shape up again. Now we're just getting pretty tight. So looking for some sort of movement there. Frog, ribbit, ribbit. This one hasn't moved yet, but it's pulling into a rising 20, rising 50, rising 200, consolidating. Good volume on the way up on earnings, right? Post-earnings consolidation. Can't trade hungry. You're right. I can't. In regards to portfolio management, do you use your intra-market analysis to adjust your exposure across sectors? Or do you take trade setups? I don't really use intermarket analysis to adjust exposure. I use it to help potentially find trade setups and kind of point me into certain directions. And then I use the technicals to help me kind of create the trade idea. As far as exposure in the market, there's a lot of factors. One, market conditions. So I'm always looking at that, right? Which I typically use the gamma flip line. And then I'll also look at, how far I've came and how fast, and then just beta of the portfolio, like position sizing and stuff like that. Like max loss, if all my stops were hit, and what percentage of my portfolio, so to make it simple, say if you have a $100 portfolio, right? Obviously people are trading more than $100, but to make math simple, you have a $100 portfolio and you have, 5 stocks, or you're trading 5 equities. Maybe that's equals 20% of the portfolio, which means what? It means you have 5 stocks making up for 20% invested into this $100. The thing here is, if all my trade ideas were to get stopped out, boom, 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 what am I willing to lose as a percentage of my total NLV? I think, right? My net liquidation value, like my full account. And people got to understand that, because a lot of trade setups, right? Your stops are not far away. So the probability of an event happening might be low. But if it does happen and you get stopped out, what are you okay with losing in your portfolio? And I'll tell you one thing, I'm not okay with losing 10% in a single trading session. That's too much. So you got to pay attention to beta and exposure in that perspective in terms of position sizing. If I lose 10% in a day, dude, that'll be, I mean, okay, look, I can come back from it. I've came back from it. It's, it is what it is. But unfortunately, that can rock people. 10% in a single day. Right. So if it's a $100 portfolio and you lose $10, chances are you don't care. But chances are you're also going to try to make that $10 quickly, which will probably put you more into the hole. Maybe you'll get lucky and turn that $90, into 100 back again. But, losses work geometrically against you, meaning that if you lose 10%, you can come back from 10%, right? You can come back from 10%. You have to make 11.11% back, right? If you lose 5% of your portfolio to break even, you got to make 5.26% back. If you lose 20% of your portfolio, you got to make now 25%. How is he so good with math? How does he know this? Because I have this little diagram that I always keep close by, and I'll show you it, okay? Here. Percentage loss, return to break even. Right? If you lose 50% of your portfolio, you got to have 100% year to make it back. Okay. It's already hard enough to have 100% up here. I mean, if you're not just YOLOing options, and if you are YOLOing options, that means your risk level is up here. And if your risk level is up here, it's hard to be consistent throughout time, because eventually you run into a problem and then you get shaken out. So it's much easier to do smaller amounts, more methodical, and slowly grow it. And one way to grow your account is by adding money to your account. Not go bigger and bigger position sizes. It's to get good at managing real money before you even have it. And then you can grow it. And then you're going to have some great years, right? These last 2 years have been, last 3 years, 4 years. Damn, I actually have to look. I've been doing pretty dang good these last couple of years. But I mean, in terms of like comparing to other people, no, it's been a crazy couple of years. I'm just talking in terms of just my United States portfolio. I mean, because if I was to take into the futures account, I had a 2,500% return on my money. 2,500%. I think it was that, and I started with $2,500, so $2,500. I think that's correct. I'd have to do the math, but 2,500 to turn to 80,000. I think that was a 2,000% gain or 2,500%. I can't remember. But in terms of my real portfolio that I actually care about, I care about that. That's a lot of money, right? That's a lot of money. That's crazy. But I do care on my other portfolio where I didn't risk that type of leverage. I don't use leverage. And if it is leveraged, like a leveraged ETF, it's still adjusted. It's beta adjusted, just so I can have more cash. 45% that last year. All right. In 2022, I didn't lose anything, which was great because that was a bear market year. So 45% in the United States Investing Championship last year. So verified performance. And then this year, I'm at like probably the same. I'm probably at like 46%, 46 or 47%. I can tell you right now. Actually, I can't tell you right now because today I'm up. So I'll give you the most updated. Actually, I can just pull it up here. Aha. Aha. Oh, I'll share some more names that I'm looking at too, by the way. Sorry, I kind of went on a tangent there. But important tangent. And trust me, I'm not the smartest guy out there, in the space, but, being smart doesn't equate to making more money, just so you know. You can be very smart and not make any money. Just ask a lot of macro people. Like, I guarantee you I'm outperforming some of the smartest macro people out there. Guarantee it. Guarantee it. And I guarantee you that there's a couple macro people out there that are way outperforming me. It's because it's more than just finding the narrative and, being smart. It's strategizing, position sizing, looking at how, drawdowns, what you can take, what you can't take. Yeah, I'll look at DLO. I think I looked at DLO already, but what was I doing here? Oh yeah, I was just sharing the year to date. I don't know. I don't really care when people show me their year to date performance. The only reason why I share it is because
some commentary from Morgan Stanley's SMO says that recent credit problems
and why I get
do
it
not
verified
seem to be systemic.
Is because
And says
people
the
watch my
markets have
show.
been discerning about financing.
That's about it.
Says there's a lot of demand for AI financing through equities and debts.
So
and knows that AI has
it's not
increased
to say,
productivity
look
in
at me,
investment
oh my
banking.
gosh, 46%. Some people would say 46%. That's all you got. Yeah, that's all I got. 46%. And today I hit another high, so it could be near. It could be maybe 47%. Which is crazy, dude. That's crazy. And then 45% last year, and it's compounding, right? So 45% last year. Then on top of that new balance, I added another 46%. That's crazy. Mind you, the S&P 500 is up 20% back-to-back years, and it's up, like 15 to 16% this year. So easy. Easier markets. Stock pickers market, right? You'd be doing just as good, right? Basically, almost. I mean, I'm definitely getting some alpha on the S&P 500, but, buying and holding, right? If you bought and hold, you'd be doing just fine. But now when the market, that's where my outperformance typically happens, is when the market starts going south. Not because I'm shorting, but because I'm protecting. And I can be pretty quick to protect. So if the market goes down 20%, like in 2022, it went down 20%. If you were holding on to that, then you came out of it, everything's good, you buy and hold. But if you missed it and then invested more towards the bottom or when we started bottoming, that's where that outperformance comes from. Down capture. Thanks, Palm Tree. Yeah, Mike, Anthony, I did look at DLO, but, it was just kind of all over the place for me. Like I said, bearish earnings move, bearish earnings consolidation. So it has to prove itself for me to be interested, right? Just like if I have a bullish earnings move, I look for the consolidation and then I try to play follow through. This was a bearish earnings move, consolidation, potential follow through. Doesn't mean it's going to happen, and definitely doesn't mean I'm going to short it, but that's kind of what I look at. The weekly EM for S&P 500, 693 to the upside, 673.78 to the downside. We've tagged it every single week this quarter. For some reason, this week it was kind of big, and it was big for the fact that we're way above the gamma flip line. So I was like, if we're gonna not tag it one week, I feel like this would be the week that we're not tagging it. But we'll close within it, That's what I was thinking. And these last couple of trading sessions, what have we done? Pretty much nothing. Actually, where are we for the week? Slightly up. So we started with a gap down. Yeah, we're up slightly on the week. So this right here is, let me go properties. I'll make this gray. And I'll go WLC, last week's close. We're right there. Actually kind of held as resistance, and then we held as resistance right here too, actually. Then we broke through it as now. Maybe if we come into it, it could be potential support. I was looking at 684, but now I'm kind of interested at 683.39 down here. 685 is still the pull here. Let me see, strikes. 685, 682, 680. We're moving into that 684. I'm actually kind of interested here. Let me see. Are we getting any crazy tick readings? Anything at all to create some? Oh, we got 9 minutes left. I'm not trading. Are you kidding me? I lost track of time. So a level of interest, by the way, then going into this tomorrow would be last week's closing price down here. We came very close to 685. 8 cents away. And there's that 684 tag right here, about 6 cents away. Kind of selling off into the close. Selling off into the close. Can I take a look at JBL? Yeah, we can look at JBL. UNH was running today, that's for sure. If we had more time left, I like that 684, but it being end of day, I don't care about trading right now. I'm locked in. I'm done. Done
Market
for a day.
imbalance, possibly about $1 billion on the sell side.
What are my thoughts on hitting a new all-time high? I mean, I think it's possible. That's why I still am invested in the markets. I still have exposure into the markets because I want to be part of it if it's going to go there. But I'm also a little skeptical on today's markets, so I'm not like 100% invested to go to a new high. But the market is pointing towards 7,000. I mean, look at the daily chart. Big move up, a little bit of a consolidation here. That's all we're looking at. Yeah, I looked at the 15-minute chart and it's like, this looks like we're falling apart. But no, we're not. We're right here. And we're just going sideways. So a new all-time high is legitimately like a day away, right? Technically, right? You can have, I mean, actually, I take that back. Like, if we closed right here, that would be, no. If we closed right here, I mean, that would be a new all-time high close. 60 basis points away. That would be a new all-time high close for the SPX. So yeah, I mean, strong stocks typically get stronger. Markets, right? When they're strong, they typically get stronger. My thought would be that. Yeah. PSTG I did see. Yeah, they had a 2 standard deviation move. Let's see where they're at now. Still at that 2 standard deviation move spot for earnings. So my thought is PSTG might be cool if we see it like move just a little bit lower into the year-to-date VWAP. I don't know if it's going to get down there without a bounce. I would prefer it to hit tomorrow. Fast. And then maybe look for a fade. But if it bounces up, like most likely that's a more highly likely outcome is that you get a little bit of a bounce. And, I just don't touch it. I want to see blood. More than this.
Some commentary from Lucid says that Q4 might not be a good quarter for them.
Q's was a weekly close last week, weekly closing high. Probably depends on how you look at it. So this is unadjusted. So this is a Q's weekly close up here would be unadjusted. Now, if I include dividends, I think, yeah, you're right. I think that's the differential. If what you're saying is what I'm hearing, yeah. If I hear what you're putting down. Oh, hey, look at this. Coming in hard. When does Lucid ever have a good quarter? Lucid, like the car company? I have no idea. Oh, coming in hard on a 15-minute chart. So we're still above that last week's closing price. So we only got 5 minutes left. So once again, I'm not trading in the last 5 minutes, but this would be a level of interest there. And then we are still above daily VWAP, which is right there at that large print, the dark pool print. Kind of got some confluence in here.
terms of earnings after hours today, we'll be on the lookout for numbers
So
from
that looks big on
Salesforce,
a
CRM.
micro
EPS
chart.
expected at 285.
This is
On
the
revenues
daily candle. Does it look
10.27
that
billion.
crazy?
Expected report on the closing bell. On Snowflake expected report 5 minutes after. EPS expected at 30 cents. On revenues of 1.18
GG
billion.
Doppler. Here's the intraday tinier chart of SPY coming into the close. I'll hold with you to the close. Somebody had asked, somebody said, hey, can you pull something up? I forgot. Could you share your thoughts on ALNT? ALNT. Yeah, but I don't know anything about it, but bullish consolidation in bullish context. So yeah, I like these type of setups. You know where your risk is at, and strong stocks typically get stronger. So high beta, man. This thing's just to move up to 60, and that's 12%. So you got to be careful with your sizing. That's for sure. You keep hearing the news on twice. Yeah. A little bit of a delay.
Just a note for
I wonder if I
Ford.
can
Ticket
adjust
F.
that
President
at all.
Trump, he does praise Ford's F-150.
Uh-oh. Ford is still setting up too. By the way. This doesn't look bad. Right? I was looking at it down here. I was looking at it over here. Then it got all sloppy over here, which basically shakes me out. And it's consolidating again in bullish context. Could be a markup phase. 200, 40 week, 30 week, 10 week. And you got Trump talking about Ford. Could be bad, could be good. Some of those high beta industrial names are really cranking today. How many positions do I have running? It depends on the size of those positions. So I feel most comfortable with like up to 10, but sometimes I might have more if they're like 1%, a lot of 1% positions or something like that, where they're pilots. I like to do some pilot positions, and I like to cut what's not working and then add kind of to what is working. So yeah, but typically like it's a little bit hard for me to manage over 10. So I like to be a little bit more concentrated in that. But yeah, I'm flexible. You're welcome, Mike. Cool. Anthony. So don't buy is what you're saying. I forget which one I was talking about when I say that. Look at the stock or the chart, whatever, it could look horrible, right? Or whatever. The thing is, if it looks horrible, but yet there's still a potential trade set up there, all you have to do is adjust your sizing a little bit more given the context of the chart, right? Like, don't focus on like, I'm going to go all in on this size, or I'm going to buy X amount of shares. Like, you have to take into account what's going on. So for Ford, like, hey, this setup looks pretty nice. It's in bullish context. Okay, check for the bulls. Check for the bulls as far as, consolidation goes. Hey, we're consolidating. Good. Stocks get tighter, then they expand, right? Oh, it's in a bullish context. Okay, bullish context. Stones throw away from highs, higher lows, trend, whatever. And then all of a sudden, okay, you take that into consideration. Like, okay, so what does that mean? Should I go full position now? Well, it hasn't broken out yet. Hasn't proven itself yet. Okay, well, maybe I get a bit more tactical. Go to the 5-day moving average. Is it above the 5-day or is it declining? Well, it's flat actually. Okay, well, I still want a position. Okay, so what am I going to do? I'm going to do a pilot position. I'll do a starter position. And if it starts showing up, getting a bit better, I can add to it. And if it doesn't, then I cut it. Now, if the stock was like MicroStrategy, which I did trade, and it looks like absolute garbage, right? But hey, because it's garbage, there's still a potential setup here on this capitulatory type move down under this 2 standard deviation. So what do? I go smaller positions because it's higher beta and it's a horrible trend, and I'm faster to take profits because of the trend. If I get it right away, I'm quicker to take profits because I don't think it's going back to 460 tomorrow, and I sure as heck don't feel like holding a lot of capital in MicroStrategy. So, once again, it goes back to your goal of trading, and my goal is to make the most amount of money in the shortest amount of time with the least amount of risk. That's what I do. All right. How did we finish today? Right about that 684. All right, y'all. Have a good rest of your trading day. Have a good rest of your day. It's been a fun trading day with all of you. I'm going to call it quits. Get some air. Hope today's session helped out, give you some insights into some trades. I only went over like 2 names that I was looking at. We had a lot more to go over, but it is what it is. People want to see what they were looking at, so maybe another
And
time.
Salesforce reporting their
I want to
earnings.
see what happened to Roku.
Revenue comes in at 9.7 billion. Does miss the expected of
Oh, it was
10.27
smart to take
billion.
off there. Hey! Mahalo. See you, Barkster. See you, Palm Tree.
Does note
See you, baseball.
Agent Force
Thanks.
surpasses 3.2 trillion
See ya, Achoo.
tokens. EPS in terms of
You're welcome.
adjusted
Ben-
EPS guidance for
Benson.
Q4. That's between $3.02
See ya,
and
Robert.
$3.04.
Thanks. Thanks, Trader at JMF.
Does look like
Come check it
EPS
out,
comes
man.
in at $3.25 for
only
Salesforce, above the
$16.
expected $2.85.
Won't break the bank. See you, Mark. Well, hey, just so you know, like, you never know. Like, if you go too crazy on a position, yeah, you can break your own bank, but the $16 itself won't. So same rules
There's
apply.
further
You gotta be
guidance here.
careful
Does
and
give
dangerous.
full year revenue view between
See you, Old Testament.
41.45
See ya.
and 41.55 billion.
See you, Let's Mark.
Street was looking for 41.23 billion on that front. And Q4 adjusted EPS seen between $3.02 and $3.04. Streets was looking for $3.03.
CRM is popping off, by the way.
And
Reported
the
earnings.
FY adjusted EPS from Salesforce seemed between 11.75 and
$18.
11.77.
Looks like it's above that, but
Street was looking for 11.36. It's for CRM Salesforce.
this is what his expected move was for earnings on CRM. So it came up there. See you, Osprey. See you, Old Testament. All right, I'm signing off. Toodaloo, everybody.
Salesforce trading with gains of 8% in after hours trade.